Hello everyone and welcome back to the channel. My name is Brent, and in today's video we're going to go ahead and hit up every single stock market portfolio out there for 2021. We're going to go ahead and quickly start off at number one. We're going to go over our 2021 goals. What were our 5 goals going into 2021? Did we complete them, or do we have to have a little bit more work here in 2022? Then once we do that, we're going to go ahead and number 2, jump in and take a look at where exactly we were at the very end of 2020. We're then going to go ahead and number 3, jump into all of our portfolios in the current snapshot. As of 2 January 2022, the stock markets are closed up until here on Monday. So this is a really good time to take a look at where we were and where we are at now. Did we grow? Did we lose? You know, in 2021, there was some big changes out there, not only in the market, but in our portfolios as well. So this is mainly to kind of showcase what exactly the stock market can do for you guys. If you are not investing, this is the best opportunity, the best time to start investing just today. When you watch this video, if you are not yet investing, definitely get started, because that is the only way you're going to start building your generational wealth. And also, I'm making this video for myself. You know, I like to do these on a yearly basis, take a look at where we were at, where we are at now, and where, you know, these are fun to kind of showcase in the past. I can go back several years from here now and take a look at where we were at just a few years ago in our portfolios and where we have grown to today. So I think that's really cool and entertaining, and being really 100% transparent with our stock market portfolios. So let me know down in the comment section below if you guys appreciate these videos. Comment below and give this video a big thumbs up, okay? So let's go ahead and get into our 2021 goals. Of course, if you guys are brand new here to the channel, by the way, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, give this video a thumbs up, make it blue. Check out my website, Investing on the Go, me on social media on IG and Facebook, and let's go ahead and get into the goals. Okay, so this is a bit blurry because I went and took screenshots from my 2020 video. I went back, took a look at the video. Looks like YouTube had actually nixed it, blocked it. I had to do an appealment to get it unblocked, so I think it's unblocked now as of today, but it's really interesting. So my 2021 goals were, number 1, I wanted to close my M1 Finance account, my own M1 Finance account, and move it to another broker. At the time, I wanted to move it to Fidelity. I wanted to combine all of our accounts, my wife's accounts and my accounts, over at Fidelity. That way we could have everything in one single location, make it easy peasy. Now it turns out, when looking at both Fidelity and my current platform, Merrill Edge, I really liked what Merrill Edge offered. They had a ton of transparent tools. You could check out your performance. You could do options really quickly, your dividend income. They had so much information to get and do details of your portfolio that I just really enjoyed their interface and all the tools that they allow you to have access to. So I actually ended up moving everything over to Merrill Edge, closing out my own M1 Finance account. I also moved my thrift savings plan from my military in the past, and that completed goal 1. Goal 2 was to close and move out into my new house. So in March of 2021, we had just purchased a new 4-bedroom with an office, 2.5 bath home, and we, in the same process, we're in the middle of selling our old home. So we ended up closing and buying our brand new home in March, and then we had at that same time had listed our home but hadn't sold it quite yet because the market had still been in that little crazy growth period. So we listed our home at $310,000. I think we ended up selling it at $326,000, and it went really smooth. I think the whole transaction was pretty easy peasy, but at that time I just really kind of dug my nose into the ground, didn't really post a whole lot during that time frame. And then we ended up moving, took a little bit of time to get into our new house and situated. But yeah, ended up moving into our new house. We ended up closing and selling our old house. I just didn't choose it to turn it into a rental. The ROI was, you know, single digits, very low. Basically, it was just mostly appreciation, and the rent wouldn't cover the mortgage if I refinanced it. So I just went ahead and sold it, took the cash. I had been living in it the last I think it's like 2 to 5 plus years, right? So those proceeds, when you sell a home that you've lived in for the last 2 out of the last 5 years, your gross from that is completely tax-free, up to $250,000 if you're single and $500,000 if you're married. So that worked out really nicely. And yeah, that was my goal 2 and 3. Basically, closing, selling my old home, moving to new home. Goal 4, I wanted to continue growing my RE business. Now, my goal 4, I didn't grow my RE business in 2021. There was more restrictions kind of going on here in Oregon. So I kept what I had. I didn't have anything per month where I didn't have a tenant. There was no vacancies. I didn't have any vacancies, so everything continued chugging. I didn't raise my rents for 2021, so everything has remained smooth. I did raise rents here effective January 2022. We're raising rents across the board on on the rentals that we currently have. So that business itself is still growing. It's maintaining itself. It's it's making itself a decent amount, and that business is continuing to grow itself. Goal 5, continue growing my YouTube channels. So at the time I had Financial Investor, which is now Brent.investing. I think Financial Investor had around 2, maybe 3,000 subscribers at the time a year ago. We're now at about 5.3 thousand, so 5,300, right around that mark. And then I have a second channel, which is Unchallenged Gaming now, but it's mostly gaming related content, going over like Minecraft. I'm also streaming 3 days a week on Twitch, Facebook, and YouTube. And I'm growing that YouTube channel. I think I'm at 2,700 subscribers. So I'm nearly in 3,000 on that channel. We'll go into my goals for 2022, but those are growing. I think I started that channel around 2,000. It's now nearing 3,000. And, it's been a little bit of a slow grower, I think. But I think it has a lot of potential going into 2022. So those are our goal, or those were my goals for 2021. And I think I hit every single one besides, really growing my RE business during that time frame. But I think 2022 is going to be the year where I'll do a little bit more growth in there. Okay, now I'm very sorry for these screenshots. It's extremely terrible because I didn't have access to my own video. When I went into my YouTube studio and looked up my 2020 recap, I basically had to look at it in the tiny little window in the editing screen because YouTube at the time had blocked my video from appearing and being able to actually use the video itself. So I had to take these horrible screenshots, and I'm sorry for that. So Roth IRA, at the very end of 2022, this Roth IRA was sitting at, there's probably like $6 in cash, it looks like. So the total balance of this account with the current investment amount of $28,536 and the amount in cash was $28,552.53. So that's where we were on the M1 Finance Roth IRA. My wife's IRA and rollover, or Roth IRA and rollover IRA. Oh, this is my wife's as well. So this is my wife's Verena. This is her Roth IRA over at M1 Finance. This is my wife's IRA and Roth IRA over at Fidelity. So the total balance here on these accounts was $9,058.19. And then we dive into my account. The IRA over at Merrill Edge had a total balance at the very end of 2020 of $10,737.31. I was actually in the negative in my IRA at the very end of 2020. My thrift savings plan, this is a retirement account from my military days when I was in the Army. This one was sitting at $12,966.59. So this one right here, I closed this account and I rolled my thrift savings plan over into my IRA because they're similar accounts. The thrift savings plan, the 401k, they can all be rolled into an IRA. That's a tax sheltered account. It's after tax deferred style account. So you don't pay taxes now, but you pay taxes later. And then we have my Roth IRA over at M1 Finance. I had been investing in SPHD, and that had completely fizzled out. I had wanted to transfer this account over to, Fidelity or Merrill Edge at the time. So what I did is completely sell out of my positions. I 100 liquidated my holdings of SPHD, and I had a cash balance of $7,077.76. I just didn't want to have any issues where some of the fractional amount wouldn't carry over. So what I did is 100% liquidate my account. That way I would just transfer my cash. That's what I cared about. I transferred my M1 Finance Roth IRA over to my Merrill Edge Roth IRA. So here, the Roth IRA over at Merrill Edge had AVI and SPLV, and I had $3,308.27 sit in the account. Then I had a Roth 401k. This is for my work. I've been at my work, I think, the last 4 years, since 2015, 2016, I believe. This had a total balance of $24,039.53. Okay, so now I'm sorry for the blurry images. But okay, so then I did the math here. Okay, for the very end of 2020, my wife's account over at M1 Finance had $20,552.53. Her Fidelity account had $9,058.19. So my wife's total retirement account, this is all mostly tax after tax, or what's it called? Roth IRA based. There is a rollover IRA at Fidelity, but for the most part, her accounts are mostly Roth IRA style. So at 59.5, any sort of income and capital gains that she makes on those accounts can be withdrawn tax-free. So her total was sitting at $37,610.72. Now my accounts for 2020, I had my IRA sitting at $10,737, my thrift savings plan sitting at $12,966 and some change, and then I had that Roth over at M1 Finance at $7,077.76. Now I also had the Roth at Merrill Edge that was only $3,300, and my Roth 401k that was $24,039.53. So exactly the same information that we covered earlier. So my total investments was $58,129.46. So my wife's accounts are a lot younger than mine, I suppose. I really hadn't invested a lot prior to 2015. So together, our accounts were at $95,740.18. So that's where we ended 2020. And I have that video up on my channel going over all these accounts. It's probably a much better screen playthrough versus what we just went through now. So that is our second part, right? We went over our goals, which is part one. Part two was our 2020 end state. Now, part three, we're going into 2021. How did the portfolios actually end? So here we are. The M1 Finance Roth IRA, this is my wife's account once again. We went up to, so if you watch my last video, I sold out of 5 holdings. So those 5 holdings, we have a cash balance there of $5,677.96. So the Roth IRA itself has a total of $43,819.86. So that's a big difference from, I think, $23,000. We'll be doing the differences here in just a minute. And it's pretty insane, the difference. Just investing and staying invested. Staying invested is the main thing that a lot of people are, have difficulty doing. They see the market peak and then they may sell out. They may take profits at some time on their holdings. They might go into the red. 2020 was harsh. It took down a lot of portfolios into the red quite a bit. I think at our low point, this portfolio in 2020 hit a bottom of around $14,000. So to be up at nearly $44,000 here at the very end of 2021, that's a crazy accomplishment, I think, right there alone. So we can see the total return of this portfolio, total-wise, is around 87.15. If we take a look at the 1 year, so here I have the all performance of 87.15. This has about $13,500 of gains with a mixture of market gains and earned dividends. And then we have the 1 year here. This is showing as of 31 December 2020. This is up 26.21%. we can see about $7,000 of market gains and a little over $1,000 of earned dividends. So the dividends wise, we were paid my wife was paid 150 dividend payments. So this screenshot here just kind of goes over January 15th. January 4th through the 15th, there's 10 companies here that pay her. Now, I didn't sit here and count every single dividend. There's 20 dividend payouts in between January 15th and March 18th, then another 20 dividend payouts, another 20 dividend payouts. I think this is about the time I sold out of AT&T in that May timeframe. I think that was like my last dividend from them. And then we can see we go into June, then we go into July, September, November, and December 30th. We had our last dividend for Main Street Capital of $3.97. So my wife had 150 dividend payments from M1 Finance inside of the account. So that is crazy. And then we jump over into her Roth IRA account and her rollover IRA. This is over at Fidelity. So these ones, we didn't touch much. I didn't do anything in these accounts. They're invested in VU. So if you're invested in VU, you don't really need to touch anything in the account. You can see here we have a penny in SPACs, which is their money market account, and 31 cents over here. For the most part, it's 100% invested, and we don't touch it. We just let it go. I don't even look at this account. This is the first time I logged into the account in the last year. I just kind of let it sit there. And the Fidelity Roth IRA and IRA have a total account balance of $11,651.49. Now, that's my wife's accounts. We have her Roth IRA over at M1 Finance, and we have our Fidelity accounts at Roth IRA and IRA over at Fidelity. Now, jumping into my accounts here, again, this is the IRA right here. So this had my Merrill Edge account, my IRA, which I think had a starting of $10,737. And then I had rolled over my thrift savings plan. So my thrift savings plan, when I rolled it over, at the very end of 2020, had $12,966.59. So that right there was $23,703.90 together. And throughout 2021, I had primarily invested, I think I had invested in AbbVie for a while. I rode AbbVie to, I think, $110, $113, and then sold out of it at the time. Then I moved the capital into Apple. Apple, I forgot what, Apple had been $121. So I think I bought $5,000 of Apple at the time. And then that one's up 46% now. There was a time when I had been investing in, what is it? Okay, so this is the IRA, right? So if I go back to the IRA here, where is the IRA? That's IRA. So I had Waco, SPLV, SPHD, Genuine Parts, and then Apple Hospitality. So there's not a single holding in the IRA that is there now. So I sold Waco, I sold SPLV, SPHD, GPC, Apple Hospitality. This is a REIT right here. And I was down by 1.3%. I was down $140 at the very end of 2020, right? And now here we are in 2021, end of 2021. We're up. This is showing 11.74%. This is the unrealized. I think I had locked in some short-term gains. I think I had also, I've been doing options in here as well. I've been selling options on Tattooed Chef. I sold options on First Horizon. These are down by just a slight amount. They're no biggie. I just been selling options. I think I make $20, $30 per option selling these. And then there were green. First Horizon had been green a couple times above the cost basis. I just haven't chose to sell it just because I'm just kind of chilling, waiting for it to kind of pop higher. Tattooed Chef, I have no problem. I had purchased Tattooed Chef originally at $16, rode it up to $24, I think $24.50, I think. And then I was forced to sell because my option was assigned. I went ahead and waited for it to drop again. I waited for it to drop to $19, bought 200 shares at $19.32. So my actual sell On Tattoo Chef was like 24 and some change, and then I repurchased it at 19.32. It's at 15.54, no biggie. I'm still positive with the locked in gains that I've made on this. And then I've been selling call options here. So I only made like 34 during this past week, but I do this on a weekly basis or like bi-weekly basis. I'll make a couple $30 to $50 selling options on the 200 and some the 200 shares that I have of that. And then Apple and Abbott, these holdings right here are just kind of long-term highs. And then I had my thrift savings plan that I transferred over from my from the military. So at the time it had been 12,966. I just went ahead and rolled it straight into VU. So it's up about 9.5% since I rolled it. So I'm really happy I kept Apple and got Abbott. These ones right here, just kind of a little bit of a fun, Tattoo Chef and First Horizon. They're more fun trading and doing some option play within the IRA versus just long term. I mean, there's nothing wrong with them long term. Tattoo Chef, I think, will just turn around and do fine. Plus, I'm still positive on it, regardless of what is showing over here. And then VU, just really great all around, ETF. So this is showing gains. There's a difference here. And this is just because I've locked in profits during 2021. So yeah, that's the IRA. And we can see the performance of the IRA here. Yeah, holding performance, since I've held it, it really hadn't done a whole lot. In 2018, it was at, I think it was like $10,000. It really hadn't done anything. Then I rolled over my thrift savings plan. I made some different investments right around July. I think I started selling out of AbbVie at the time. I rolled into Apple and Abbott, and I rolled over my thrift savings plan and just chose different investments here. So we can see here towards the end of, mid 2021 to the end of 2021, that's where most of the performance has come from in the recent times. So during this time frame, this goes back, let's see here, total net contributions is, my original net contributions was $24,208, and I've earned $944 in dividends. And then we have that difference there just by holding, doing some options and other stuff within the account. We've made about $6,800 in the IRA style. And then we have our Roth IRA right here. We started the Roth IRA. The $7,077 was a rollover Roth IRA from M1 Finance, and then I had a base, I had the base Roth IRA amount of $3,308.27. So all I did was roll over my M1 Finance Roth IRA into my Merrill Edge Roth IRA. That equaled around $10,386. Now I've invested mostly into VTI. You can see here I own 85 point some shares of VTI, and I own 2 shares of JEPI. The reason I don't own 100% VTI is because I cannot purchase fractional shares on Merrill Edge. I can take the dividend and dividend reinvest by buying fractional shares, but I can't directly buy, say, $126.38 worth of VTI. So I had cash sitting in the account that I just decided, you know what, I'm going to go ahead and just invest it into JEPI, and that's up 5.26%, plus this pays out monthly dividends in itself. So no biggie. If I could buy more VTI in this account, then I would do so. I just cannot. And you can see here we have Roth IRA, plus I added $6,000. So that's where the other difference is. I added $6,000 of my own cash this year into this account. So that put it at $16,386. And on that capital, we made, I don't know where the remaining pieces are. I think we may have traded in and out then. But this account sits at $20,790.60. And I'm not going to change anything here. I'm not planning on moving. Actually, I may change this around now that I think about it. I have actually kind of thought about selling this and moving all of it into SPY, SPY. But I'm undecided. I don't have enough capital to buy 100 shares of SPY. So I may just keep it the way it is. I may look at it a bit further down the line and see if I can choose either VU or SPY and just kind of do something. But for the most part, this will just remain untouched. So here's the Roth IRA performance. I really didn't do anything in here. I think I had, what is it, the Roth IRA. I don't know what happened here. I may have liquidated my accounts. I think when I got into, I think I had rolled it over somewhere and then rolled it back here in 2021. I don't know what had happened here, but something happened. I don't know. But in May 31st, 2021, this was sitting at $3,525. I rolled over that $7,000 from the M1 Finance Roth IRA, and then I contributed $6,000. So my total contributions are $18,512.43. We've had about $1,700 in performance, and we've made $534.95 in dividends. So that's the performance. That's the historical performance. So there's been a time frame. I don't know what happened here. I don't remember. This was back in 2018. So I may have transferred it to another broker, may have transferred it back here. I don't remember. I'd have to go look through the history of the account. But I'm going to continue staying over at Merrill Edge for these accounts long term. So this will look a lot better, I think, going in 2022. And then we have our Roth 401k. I think this was sitting at the $23,000 mark back in 2020 end. So here we are, very end of 2021 now. This is sitting at $38,731.79. This has had a rate of return for the year to date of 28.34%. And we can see here the dividends that we've received here in the account for this year are $377.29, the $103.87, the $112.54, and the $938.19. So the total dividends that we've received in this account, this is the Roth 401k, is around $1,531.89 of dividends. And I'm holding the Vanguard Institutional Index, and this just has 405 shares. And yep, just about there. So nothing big on here. I'm not changing anything here either. I'm just remaining within my Vanguard Institutional Index, continuing to I think I just do 5 or 6% of my salary. That way I get a match. And that's all I'm investing in my Roth 401k. Then we have the taxable account. This is the new account of this year, 2021. I was able to purchase, I had a lot of cash on the side waiting to purchase my house, my brand new house in March, because I had to put 25% down because I have other rentals. I had my other home. I was trying to purchase another home. So I had so much debt at the time that the banks were like, dude, you cannot put just 20% down. You have to put more. So I think I ended up putting 25 or 30% down on my new house, and I had to have more capital available at the time. But once we put the money down towards the house, purchased the house, and we sold out of the new house, we were 100% ready to go. And I went ahead, opened up a taxable account. I made a video going for, Merrill Edge at the time had been offering a $500 or $1,000 incentive to invest X amount of capital. So I went ahead and just went for that bonus. Plus, I wanted to just add more money into the market. So here, this is all fresh. We went ahead, and for a while, I had been holding some 300 and some shares of SPY. I did sell my SPY at 447, I think it is, or at 457. I think is where I had sold out of my SPY. So I had held 305 shares for quite a while, and I wrote it up until $457 just recently, and I made a video on this, and my options were assigned out. So at $457, my 300 options, or my 300 shares, had been assigned out to someone else. I still kept my 6 shares because I didn't sell those options, obviously. And then since I sold those options back in November, I believe, or October, I have been running puts on the S&P 500. The S&P 500 hasn't really put on much over where it's at now, right? So SPY is sitting at 474, but it wiggles a lot. It goes up and it comes down really quickly and hard. And I think here in the early stages of 2022, we may see a bit of a pullback. And I will probably just dump the rest of the capital that I have, the money in hand, just because I had it all invested at one point, and then my options were assigned out, and I've been making, I think I made like $2,500 in options in December, just selling the option to buy at 455, but it just hasn't pulled, right? So I also own JEPI. I own 401 shares of JEPI. This is mostly just to kind of have my cash. I don't like having cash in, having cash just sort of sitting there. So I threw it at JEPI. It's up 2.67%. No biggie there. It's making about 95 or something dollars a month in dividends. So if I find that the market pulls back to say if SPY pulls back to 450s, I will probably sell all of my JEPI and buy all the shares of SPY that I can buy for 2022, and then just not think of anything, think anything of it. And then Facebook, I purchased that here recently. I picked up 9,000. I picked up as close as I could to 10,000 shares, $10,000. So I picked up 30 shares. And, Facebook's been there. It's been going up and down. I feel like they have a lot of potential in the future. In the next 2 to 5 years, I see Facebook doing really well. Here in the short term, they were going through some major issues, legally, and they still are not back at their $1 trillion status. I think they had hit $1 trillion for a while. So I feel like Meta here, Facebook, has quite a bit of potential going into the next 2 to 5 years, especially with the whole VR and the potential for additional sources of revenue that Facebook has. And then I have cash balance, and that's just, I sold options on SPY, had my options assigned out, and I feel like the market at the time, I'm just kind of holding off a little bit. I think the market will do a bit of a pullback, and when it does pull back into the 450s, I do plan on just selling JEPI and doing everything I can at SPY and just kind of holding that and doing call options on SPY here in 2022. So this account's sitting at $175,032.82. So that's where the taxable account's sitting at the moment. So here we can kind of see the performance. We really hadn't done a lot in this account. This account's fresh. I made this account in June 2021 up until December 31st, 2021. So yeah, I put in $167, $865.80 of contributions. We've made about $5,800 in capital appreciation, and we've earned dividends of $1,344.83. So that's where the performance is at the moment. And this is just sort of cash that I had sitting around for like my real estate business to kind of throw at different offers. I still have cash reserves, and I'm, to get into other opportunities. But for the most part, I think this is just don't invest what you're not willing to lose, right? At the very end of the day. So just have reserves on you at all times and you'll be safe. So here, this is sort of the breakdown of some of the dividends that I received. I think I just kind of captured like a quarter of dividends. So VTI, they paid roughly every quarter, $61.56. First Horizon, they paid every quarter. Those 200 shares, they paid $20.40. So that's a nice quarterly dividend. VU, $52.34 from the, where did I hold VU at? My Roth IRA? Is either my IRA or Roth IRA. Then we had JEPI, they pay out monthly. So JEPI, $82.86, $88.86. And up here, $93.37. We also had SPY, $428.44. That's every quarter. But again, I don't have those 300 holdings anymore. So I probably won't receive that here in December, obviously. Just because I don't hold the 300 shares. Unless the market really topples and my puts get assigned to me. That would be awesome if I bought SPY at 455. So yeah, that's where the market's at. So here we are, 2020. are together, we're at $95,740.18. Here's the breakdown of the accounts. This is my wife's accounts, and then her total, and then my accounts and my total, and then our joint together between the both of us. Then we have my wife's accounts here. So her M1 Finance account, it grew not only appreciation. This is appreciation, but I also deposited $6,000 of fresh capital. So her market gains this year in 2021 are around $9,000. That's from dividends and capital appreciation. Her Fidelity account, that is mostly capital appreciation. That's up $2,593.30. So her total moved from $37,610 for not doing anything. We added $6,000 to that. Well, it would put it about $42,000. So her base total would have been from $42,000 to now $55,471.35. That's a difference there of $17,860.63. So $6,000 of that again is contributions that we made for her accounts. But the remainder, $11,000, near $12,000 is all capital appreciation and dividends. So that's really cool for, that's something that my wife really didn't consider getting into herself. So just kind of having someone else out there, myself, to kind of push her and get her accounts in the right direction, that's going to help out a lot towards retirement. And then my accounts here, Brent, I had rolled my thrift savings plan into my IRA. So the combined total there between my IRA and Roth IRA, and then current, it's at $32,020.53. That's a difference of $8,316.63. This, I didn't add any more capital into the IRA. This is all capital appreciation for 2021. The M1 Finance, this is the Merrill Edge Roth IRA. So here I rolled my M1 Finance Roth IRA over to my Merrill Edge Roth. So we had about $10,300. It now sits at $20,790.60. That's a difference of $10,404.57. Now here again, I added another $6,000 for 2021, contributing to the Roth IRA. So between here, we added $6,000 for her M1, and I added $6,000 here for my own Roth IRA over at Merrill Edge. The Roth 401k, I went from $24,039 to now $38,731.79. So here, this is all mostly market appreciation, and then I don't know how much I contributed to the Roth 401k. It's I think like 5 or 6% of my salary overall, and then I get the match, just doing the match. But you can see how powerful these tools are. If you have a match and you have access to a 401k, a Roth 401k, you need to be contributing to your accounts to get the match, because it's I guess people say it's free money at the end of the day, plus just appreciation over time. So that's near a difference there of $15,000 between 2020 and 2021 end. So total accounts here went from $58,129 to now $91,542.92. That's a difference there of $33,413.46. $6,000 of that is deposits, right? I deposited capital into the Roth IRA, but the rest of that is mostly capital appreciation. Oh, also I deposited to the Roth 401k. I'm sure not all of this is capital appreciation. I'd say half of that probably. So I'd say maybe 15 to 18,000 is mostly capital appreciation. The rest of it is mostly deposits, right? And then the joint account, we didn't have a joint account in the past, like a taxable account. So this is all just fresh. So I just put in 175.32, and this was started with 167, around 167,000. So we've made a little bit on that as well. So sitting together, our total stock market portfolio is currently sitting at $322,047.09. So that's a big difference versus together at the very end of 2020. So this is kind of where I was saying at the very beginning of the video, we basically 3x how much we had invested in the stock market in 2021. And you may say the stock market is trading at all-time highs. Why are you investing this much capital? there's no better time to invest than today. What's your money going to do when it's not invested? It's going to sit in the bank account. It's going to get either spent or it's going to lose value and get deflated. It's better to look at businesses that are, going through the day, selling products, selling services, making money in this environment, and buying into those companies such as, Apple, for example, right? I bought Apple. I bought Abbott. I invested a ton into the S&P 500 this year. So that is mostly where our capital appreciation sits at, right? In those big businesses that are making moves here in 2021 going into the long-term future. So that's where our accounts sit here at the very end of the day in 2021. Now, part 4 now. What are my 2022 goals? No, my number one goal is I want to max my and my wife's Roth IRA for my Merrill Edge account. I want to put $6,000 into my M1, the Merrill Edge Roth IRA, and I want to put $6,000 into my wife's Roth IRA over at M1 Finance. If you guys are interested in starting your own accounts over at M1 Finance, I definitely recommend it. I have links down in the description below. Right now, if you sign up, you get $50 if you deposit $100. Plus, they have like a year access of M1 Plus. So included in the goal 1, I also want to sign up for 1 year of M1 Plus because it's completely free. And then with the M1 Plus access, I want to make a child account. I forgot, it's like CDMA child account something, right? I don't know. But my son has capital. He wants to invest in the stock market as well. And I want to get him started over at M1 Finance where he can just take his money, deposit it in there. He can look at it on a weekly basis, monthly basis, however he wants to look at it. Because he's asking me all the time, hey dad, how much money do I have in my savings account? And the savings account has a APY of like 0.5 to 1%. So it's really not a lot versus if it was invested in the market and an account for him. So M1 Finance Plus gives you access to those accounts for, I can't think of the name now, but that's one of the goals I want to do is open up an account for my son. And then if I need to, at the very end of 2022, I'll roll it over to Fidelity underneath my wife's accounts. Goal number 2, I want to grow my RE business. Obviously at the very beginning of 2022, now that most of the restrictions, issues, the illness is kind of out of the way, I never raised rents in 2020. I never raised rents in 2021. So 2022 is going to be the year where I've raised rents just slightly. And it's going to make a difference, a couple $100. But that's going to help grow the RE business just slightly on the income, more taxes, right? And then I want to make 10 to 15 reasonable offers. Now, reasonable offers means if a home is worth, $150,000, $200,000, but it needs $50,000 of work, I don't want to offer them $200,000. I want to take, a little bit of a profit of like 10% and then take away my potential repair costs and then make them an offer that's reasonable for the repairs that need to be made in the home to take it back to optimal state. So I do want to make some offers this year. I do want to grow my real estate business. I want to get to about 5 to 10 doors would be my goal for my real estate business. And then once I get, say, 10 doors, each door is making $1,000 and some dollars. If I were to pay off each property, and then I have 10 properties, if I could specifically target to pay them down, I could make $10,000 for my real estate business without having any loans. But, that's a process in itself, and that's a long-term goal, not just short-term, but, I still want to make reasonable offers. If I can pick up 1, maybe 2 properties in 2022, that would be reasonable. I'm not overshooting it. I have time on my hands. I'm kind of close to 40, but not so much close to 40, right? I turned 36 last year, so I'm going to 37 sometime this year. Whoopee. Goal 3, I want to continue to grow my YouTube channels. I want to make it more of a focus. My focus had been kind of off lately. I had been focusing kind of on Instagram, trying to grow my Instagram page. I had been kind of trying to grow my Facebook page, my website. Those I think aren't as potential for growth and return. IG, I just don't see the return there for the time it takes to create the content, make it fun, post it, find tags, throw tags, build a following on there that's community wise. People just kind of scroll through your post, they like it, and then they move on. There's no way to kind of build anything around that community wise. Facebook, I've been streaming on Facebook. That's one of the reasons I purchased Facebook, was because I think my YouTube channel wise, my other channel is at 2,700 subscribers. It's mainly focused around streaming, gaming, but I also want to kind of make Facebook streaming like a main focus as well. And going into the future, I think that's a really, like right now, Facebook is very small as far as a streaming platform. But now that I've been kind of focusing on watching other streamers on the platform, having streamed there myself, here in December, late December, Facebook was giving $50 bonuses for having a star party. So if you were streaming, you had a star party goal, Facebook would give you $50 on top of the stars that you received from, your community, your viewers, right, and followers and such. So it's been a really interesting platform. I think I see a lot of potential there, not only on the streaming side and the VR side, but also just continued growth in other sectors of their business. So I do see Meta itself being just really interesting area. So that's kind of like where my focus is. My focus so much isn't on my website anymore. I have some articles there. It doesn't cost a whole lot. Obviously the hosting costs a little bit, but it's all tax deductions. So having a website there that's available, I have an area to kind of point people to if they have questions. I could kind of write articles and have something where, hey, if there's a video that is, I could do a better breakdown by writing it out and having a step-by-step guide, then I will put it on a website, but it won't be so much of a big focus. I do want to create better content here on YouTube on my financial channel, going over better how-tos. I just think it's very plain and simple that a lot of people often make it more difficult than it is to invest. The majority of my portfolio is the S&P 500. That's the primary, somewhere around the total market, S&P 500, I think makes up 75-80% of my portfolio. The remainder of it is in these little tiny little onesie twosie companies. And at the very end of the day, I would probably invest all of it into, say, the S&P 500 and then have 5 really good holdings, such as Apple, such as Google, such as Facebook, the FANG stocks, that I think would help push that total portfolio return higher versus the stock market return. So that's kind of where I see it. I don't see it as difficult, and I didn't make a lot of videos going over the financial topics all the time, just because at the very end of the day, it didn't matter what the market was doing. You should just invest on a weekly basis, a monthly basis. What's going to happen is going to happen. You're not going to be retiring in the next year, maybe 5 years, maybe 10 years. But for the most of us out there that are watching these videos, we're not going to retire in the next 10 to 15 years. So regardless of what the market does this week, next week, the month, this year, it's not going to matter in the long term, in the short term or long term. So it's better just to kind of get started, pick up the S&P 500, and just throw money at it, right? And, I tell a lot of my friends that. I've helped a lot of friends this year in 2021 get started in the market, and they are positive, and they can kind of see the potential there. I think it's kind of opened their eyes to what is, potential out there. So I think that's really good for today. Let me know down in the comment section below if there's any other comments or questions that I may have missed. And hopefully this wasn't anything of a, here's our portfolio, look how much we made. No, this is more to kind of showcase what the potential of the stock market has to offer if you are invested. If you are not invested, inflation is going to be eating away at your capital. This is not the time to kind of sit on the sidelines and wait. So that's one of the reasons I kind of wanted to make this video. And then the second reason was obviously I like to track my progression for myself. I started investing in the real estate back in 2018, 2019. I have more in real estate versus in the stock market, and then I have in crypto as well. And I have all these little niches that I didn't really ever focus on. It just all became because of this channel and setting the financial goals and kind of making it work. So yeah, let me know down in the comment section below if you guys have any questions for me. Otherwise, I will see you guys in the next video. Really appreciate everyone for coming in here and hanging out with me. And hey, again, if you guys have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video. And of course, check out my other channel or my my site, investingonthego.com. Also follow me on Instagram and Facebook. Go down below, drop me a comment. Where are you at here at the very end of 2021? Are you excited for 2022? I'm very excited regardless of what the market does, because in the long term, it's all going to be positive, right? So that is it. Thank you all for tuning in. I will see you guys next time. Have a great day. Bye-bye.